Welcome to Investor Web, your reliable companion in the fascinating and often intricate universe of financial knowledge and investment strategies. Here we aim to equip you with the tools and insights necessary to navigate the labyrinth of economic trends, market predictions, and investment opportunities. Today we delve into a topic that often stirs up a mix of intrigue and apprehension: recessions. Yes, you heard that right. While they may seem like economic doom and gloom for many, recessions can actually be a golden opportunity for those prepared to seize them. We're going to explore the somewhat paradoxical concept of how the affluent can, and often do, benefit during these periods of economic downturn. So buckle up as we embark on this enlightening journey to uncover the 10 ways that rich people can actually benefit from a recession. The first way that rich people benefit from a recession is through buying opportunities. You see, a recession often causes prices for various assets to drop. This includes everything from real estate and stocks to commodities and even businesses. As the value of these assets decreases, so does their price tag, making them much more affordable. Now, for many people, the thought of spending money during a recession might seem counterintuitive. However, for the wealthy, it's an entirely different story. They understand that these lower prices are temporary and they seize the opportunity to buy at a discount. They know that when the economy eventually recovers, the value of these assets will increase, turning their investments into profit. This strategy isn't without its risks, of course, but with careful planning and a keen eye for value, it can pay off in a big way. So, while others may see a recession as a time of loss, the wealthy often see it as a time of opportunity. The second advantage rich people have during a recession is the opportunity to borrow at lower interest rates. Now, why is this? Well, in times of economic downturn, central banks often employ a strategy of reducing interest rates. This move, aimed at stimulating economic activity, reduces the cost of borrowing money. Picture this: you're a wealthy individual with a robust financial portfolio. The central bank slashes interest rates. Suddenly, borrowing money becomes much cheaper. You're essentially given a golden ticket to borrow large sums of money at a significantly reduced cost. What happens next? These individuals, armed with this cheaply borrowed capital, can then invest in a range of assets. From real estate to stocks, the world is their oyster. The lower the interest rates, the more money they can borrow, and the more assets they can invest in. This allows the wealthy to invest in more assets, further increasing their wealth. The third and fourth benefits for the rich during a recession are consolidation and an increased market share. Let's delve a bit deeper. A recession often leads to a shakeup in many industries. Weaker companies may struggle to stay afloat and ultimately fail, leaving a void in the market. This is where the wealthy can step in. They have the financial capacity to acquire these struggling businesses, leading to consolidation within the industry. But it doesn't stop there. By acquiring these businesses, the wealthy don't just consolidate their position, they also increase their market share. This increased market share means they now control a larger piece of the industry pie, enhancing their influence and ability to shape the industry according to their vision. So, in essence, a recession presents not just challenges, but opportunities too. It's a chance for the wealthy to strengthen their foothold in the industry, and with fewer competitors, they can increase their market dominance. The fifth and sixth ways the wealthy can benefit from a recession are through lower labor costs and the opportunity to buy businesses. Let's dive into it. When economic downturns hit, unemployment rates typically soar. This unfortunate circumstance creates a surplus of available workers, which in turn leads to a reduction in labor costs. Affluent individuals and companies can take advantage of this by hiring highly skilled employees at a fraction of the cost they might have paid in a more robust economy. Simultaneously, recessions often force businesses to sell at lower prices than they would in prosperous times. This presents a golden opportunity for those with disposable income. They can acquire these businesses, often at a bargain, and nurture them back to health as the economy recovers. These two factors, lower labor costs and the ability to buy businesses at reduced prices, can significantly increase profit margins for the wealthy. Thus, they turn the tables, transforming economic adversity into financial advantage. The seventh and eighth benefits for the rich during a recession are tax advantages and the ability to make long-term investments. Let's delve into these. Tax advantages are often overlooked, but they can be game changers. During a recession, the government often implements tax cuts or incentives to stimulate the economy. These tax advantages can allow the wealthy to save substantial amounts of money. money that can be reinvested to generate even more wealth. Moving on to long-term investments. Recessions may seem grim, but they offer a silver lining for those willing to wait. They present a unique opportunity to buy assets at discounted prices. Whether it's real estate, stocks, or other commodities, the wealthy can swoop in to make these investments, knowing that their value is likely to appreciate in the long run. These strategies, exploiting tax advantages and making long-term investments, are not just about surviving a recession, they're about thriving in the aftermath. These strategies can lead to substantial financial gains in the future. The ninth and 10th ways the wealthy can benefit from a recession are through strategic partnerships and increased bargaining power. Now let's delve into these. During a recession, businesses often find themselves in choppy waters. In their quest for survival, they start seeking strategic partnerships. This situation presents an opportune moment for the affluent to step in, providing much-needed capital in exchange for a stake in these businesses. It's like a lifeline for the struggling business and a potential goldmine for the wealthy partner. Additionally, in a recession, the rich find themselves with a significant advantage: increased bargaining power. With their financial resources, they're able to negotiate better deals, whether it's for acquiring properties at lower prices or securing more favorable terms on investments. They can use this leverage to make acquisitions that would be cost prohibitive in a booming economy. These final points highlight how the wealthy can leverage a recession to further increase their wealth. To conclude, while a recession may seem like a challenging time, it can actually present numerous opportunities for the wealthy. We've explored 10 ways in which the affluent can leverage economic downturns to their advantage, and it's worth revisiting them briefly. Firstly, recessions often bring about a wealth of buying opportunities. A downturn in the market means lower prices, and for those with capital to spare, it's a veritable shopping spree. Secondly, lower interest rates, typically introduced to stimulate the economy, can be a boon for those looking to borrow money for investments. Thirdly and fourthly, we discussed consolidation and increased market share. As smaller companies struggle, larger ones can absorb them, thereby increasing their market presence. Moving on to points 5 and 6, we delved into the benefits of lower labor costs and the possibility of buying businesses outright. With higher unemployment rates, labor costs drop, and struggling businesses may be available for purchase at a fraction of their usual price. 7th and 8th on our list were tax advantages and long-term investments. Recessions can lead to tax relief measures that benefit investors, and they also provide the chance to invest in long-term projects at lower costs. Finally, we explored strategic partnerships and increased bargaining power. In tough times, businesses are more open to collaborations, and with more capital, one has a stronger position to negotiate deals. These 10 points illuminate how those with financial resources can not only survive but thrive during recessions. Economic downturns, while challenging for many, can present a golden opportunity for those equipped with the right knowledge and strategies. Remember to subscribe to Investor Web for more insights into the world of investing. Thank you for watching.